The Vanguard Intermediate-Term Treasury ETF, VGIT, is an exchange-traded fund that seeks to track the performance of the Bloomberg Barclays U.S. Intermediate Treasury Bond Index. This index is designed to measure the performance of U.S. government debt securities with maturities between 2 and 10 years. The VGIT ETF is managed by Vanguard, one of the largest and most respected asset management companies in the world. Vanguard is known for its low-cost investment products, and the VGIT ETF is no exception. Its expense ratio, which is a measure of the annual fees that investors pay to own the ETF, is just 0.07%. This is significantly lower than the average expense ratio for similar ETFs in the market, making it a cost-effective option for investors looking to gain exposure to the intermediate-term U.S. Treasury bond market. One of the key features of the VGIT ETF is its focus on intermediate-term Treasury bonds. These bonds are considered to be among the most safe and liquid investments in the fixed-income market. They are issued by the U.S. government and are backed by its full faith and credit. As such, they are considered to be among the safest investments that an investor can make. Furthermore, the intermediate-term maturity of the bonds in the VGIT ETF means that the fund is less sensitive to changes in interest rates than shorter-term or longer-term Treasury bond funds. Another key feature of the VGIT ETF is its diversification. The fund holds a wide variety of Treasury bonds with different maturities and coupon rates. This diversification helps to spread the risk among a large number of securities, reducing the impact of any single bond defaulting. Additionally, the VGIT ETF's diversification provide a good source of income as the fund pay regular dividends, which are considered to be a reliable source of income that can help to balance out the volatility of the stock market. The VGIT ETF is suitable for a wide variety of investors. It can be used as a core holding in a fixed-income portfolio, providing a steady source of income and a degree of safety. It can also be used as a diversifier for a stock-heavy portfolio, helping to smooth out volatility and provide a measure of downside protection. The fund can also be used as a tactical tool for investors looking to take advantage of short-term movements in the Treasury bond market. Despite being a safe and reliable investment option, the VGIT ETF also has some potential drawbacks. One potential issue is that intermediate-term Treasury bonds may not offer as much potential for capital appreciation as other types of bonds with longer maturities. Additionally, the VGIT ETF's returns are subject to interest rate risk. Interest rates and bond prices have an inverse relationship, and when interest rates rise, bond prices fall and vice versa. Therefore, an increase in interest rates could lead to a decline in the value of the bonds held by the fund, and as a result, the fund's share price may also decline. In conclusion, the Vanguard Intermediate-Term Treasury ETF, VGIT, offers a low-cost, diversified and reliable way for investors to gain exposure to the intermediate-term U.S. Treasury bond market. Its focus on intermediate-term bonds, low expense ratio, and diversification across a wide range of bonds, makes it an attractive option for investors looking for a safe, stable, and reliable source of income. However, it's also important to consider the potential drawbacks of investing in intermediate-term Treasury bonds, such as lower potential for capital appreciation and sensitivity to interest rate risk.